Have you been thinking about long-term disability insurance? Here to speak with me about that is Rob Ziliak from Buckingham Strategic Wealth. Welcome, Rob.
Thank you, Ilana.
So you recently wrote a piece about this for Retirement Daily. Can you walk us through that?
I did. Long-term disability insurance, Ilana, for a mysterious reason, tends to be written about and talked about very rarely, as certainly relative to other aspects of insurance, like life insurance and long-term care insurance. The reality is, most of us, and let's define us as, say, young adults from age 20 all the way up until retirement age, our probability of undergoing an injury or ailment of some sort that would require a long-term disability is far greater than us actually passing away. But yet, for whatever reason, life insurance is presented to us much more frequently. So the overview of the article is highlighting that even if most Americans who are in their working years have long-term disability coverage, chances are very good that they're underinsured. And I walk through some steps about what can be done about that.
Mhm. So how have some of the recent world events shaped the need for more long-term disability insurance?
Yeah, so a few things going on with that. One of them certainly is COVID, which we've still not escaped the throes of. And a second is that overall, Americans' financial situations are not particularly rosy. So let's touch on both of those reasons as a catalyst for why long-term disability can be important. Um, for one, those who are not financially well situated and still in their working years are at risk of not being able to pay their basic bills, let alone save towards their financial future of key goals like retirement or children's education or paying off homes or what have you. And most Americans, based on studies in the past, barely have a 90-day emergency savings fund. And the average claim for long-term disability payouts is actually 3 years. And so there's a big gap between most Americans' financial readiness and the actual need to pay out benefits that long-term disability can fill. The second thing is the wild card that COVID presents to us. And of course, there are wild cards in many facets of life, but specific to Americans' risk of needing long-term disability is the long COVID or long form COVID. We're simply too early on to understand what the long-term ramifications are. But as recently as this summer, immunologists have been studying and recognizing that symptoms for the long form of COVID are not going away. And they're expecting that many more Americans will actually be ineligible to work, at least in the profession that they knew in the past, due to the long COVID symptoms. So there's a couple of big risks out there.
And so how can people go about getting long-term disability insurance? What are their different paths to it?
Yeah, so there are really about three different paths, and from least attractive to most attractive. Least attractive is to rely on the Social Security disability insurance. And that is a big risk for a couple of reasons. For one, it is very difficult to get approved for it. So while this is a federal insurance offering, it takes an awful lot of, oh gosh, what's the right phrase? A lot of problems, if you will, in order to get approved to receive Social Security disability insurance. And for those who do get approved to receive it, there are two issues. One is that the average annual payout is less than $15,000, which is basically poverty level wages. A second factor is those who do get approved tend to be really chronically ill, not just like your run-of-the-mill ailments, but like those that are chronically ill. And the odds of those who are on Social Security disability of passing away while they're still collecting it is exponentially higher than those that don't collect Social Security. So that's a big factor. It's not appealing. The second option is through the employers. So if an individual is fortunate enough to work for a company that offers long-term disability insurance, the upside is you can get approved for it easier. You don't have to undergo a considerable amount of medical proof in order to get insurance coverage. A couple of downsides to it. One is that most of the payout is capped at 60% of an individual's income. So the person needs to be able to afford a considerable reduction in pay in order to satisfy or be satisfied only with their employer's plan. The second factor is that the premiums may get paid by the employer, and if so, that means the payout would be taxable income. But if the employee pays the premium, their income would actually be tax-free. So even that 60% threshold of income can be radically different as to whether it's pre-tax money or after-tax money. And then a third path to actually capture long-term disability insurance or manage it maybe most effectively is by buying a policy as an individual. And that can sometimes be done in tandem with the policy that is held through a company, through an employer, or it can just simply be bought as an individual. And the advantage to that is the policy holder is completely in control of that policy from the time that it's purchased until the time that they retire or decide they no longer need it. The complication is it is much more expensive than insurance, like life insurance, but ultimately there is a way to try to get full replacement of income through a personally owned long-term disability insurance policy. And that's a path that many more people should travel than do today.
So off of that, you mentioned that is one of the paths that you can almost perfectly, if not perfectly, best match your pre-disability income. But for all the paths that you can't quite match your pre-disability income with your disability benefits, what are ways people can bridge the gaps?
Well, it can be difficult to bridge that gap, right? If they're not covered, timing matters. So if unfortunately, many Americans are not sufficiently equipped with long-term disability insurance when the need arises for it. And the need can arise in most cases unexpectedly, right? So back injuries and other physical ailments that arise through physical activity or doing chores around the house or things like that are unexpected. We don't see that coming. Even things like cancer diagnosis, in many cases, we don't see it coming. Pregnancy is another catalyst for long-term disability. So while that is recognizable and there's some time to prepare, starting at that stage is not the right time. So how do you bridge the gap? Well, in many cases, it's not easy to bridge the gap. And what actually might be necessary is a reduction in lifestyle expenses, or simply an inability to save towards long-term financial goals while a person is suffering from some sort of long-term ailment without having enough disability insurance coverage to fill that gap.
Well, those were all my questions. Is there anything else on the topic that we haven't talked about that you think is important to bring up?
Maybe just one area as it relates to individuals who may buy a long-term disability insurance product. There are some ways to reduce costs. One is to look through a professional association. So oftentimes financial services employees, physicians, dentists, attorneys, accountants are members of professional groups. So an individual can look into those professional groups and oftentimes find group discounted policies for great coverage. So that is one avenue that individuals can check out before they turn to an insurance broker directly to seek the right level or the right type of policy. If an individual is not sure how much coverage they may need, it's best to turn to a fiduciary wealth advisor who's actually not selling the insurance product for a commission to get an assessment performed of answering the question of what is the right level of coverage. And then the individual can turn back to the company or person who's selling the policy and purchase an appropriate amount.
Okay, that's a lot of really great information. Thank you so much for taking the time to speak with me, Rob.
Thank you, Ilana. I appreciate it.